If you can just put a light on it.
Yeah, so I think, our focus right now is on the supply side, on supplying the meters. I think we have taken it up earlier also on a similar question like this, that probably as we, the next two, because whatever even the future orders what are expected would be supplied in the next 2 to 3 years. So this is what would happen. But the warranty and the O&M would go on for the next subsequent 7 years. So I would say right now our focus largely remains on the design, manufacturing and supply of smart meters. But I'm sure as we are, let's say, after 2 to 3 years, when we see larger opportunities coming in the O&M space, that is where I think a manufacturer like us with deep-rooted experience of manufacturing, designing and understanding the meter and the ecosystem, after all, we have been over 25 years in meter supplies, and practically every state, every district we have been supplying for so many years. So we do understand the topography, everything, what a meter should be. So maybe at that time we probably can look at these opportunities, and then as they come forward, we can align ourselves and to look at that. But right now, on an immediate basis, I don't see that happening here, because our focus would largely be on that. And also, if you see, right now, although over 10 crore meter orders have been given, the installation is still only about 10% of that. So, the more installations need to happen, then these kind of challenges on the O&M side would come, and the maintenances and other things would come, which is, of course, again, a revenue stream, and that would come, and we would probably align ourselves later. But right now, I don't think we would do that.
Okay. Thank you so much. That's all from my side. Thank you very much.
Thank you.
Thank you. The next question is from the line of Viraj Mahadevia from Moneygrow Asset. Please go ahead.
Hi, Gautam. Thanks for taking my question again. Are your manufacturing lines between smart meters and regular meters fungible? I.e., can you make both smart meters or regular meters, and as your business shifts to smart meters, can you phase out regular meters to take up all that capacity?
Yes. Yeah, we are already doing it. And so these are, because if you see, the manufacturing involves various processes. So like, we are talking about the electronic manufacturing, which is the PCB and the complete back-end electronics, along with the ICs and the passive, the components. So all that is easily flexible. We have already, what we used to make as a normal traditional meter, today we make smart meters in the same line. In fact, we have enhanced those machines, but with the additional capacity, but those are flexible. The industrial plastic, anything on sheet metal, tool rooms, everything is changeable, including the assembly and testing part is there. But of course, we have gone a little beyond that, because now the new lines what we have for smart meters are fairly semi-automated, complete conveyorized. So, I think within a couple of minutes from one end to another, we would have the smart meter coming out from the other side. So those are, of course, newer lines, which we were not doing in the traditional part. But yes, to answer your question, yes, the capacity is all usable.
Okay, fantastic. My second question is regarding raw material supply. How much of it is sourced within India? How much comes from China, and how much comes from rest of the world in rough percentages?
I think, government has set up a couple of norms for these, and they have also norms given to us, which would, come in force next year also, like a phase out feature. Obviously, the main intention is that the maximum product needs to be made in-house. So currently, I would say we are having, other than the components which are not made in India, like ICs are not in India, the passive electronic components and the industrial plastic, which are specified and not used in, which are specified by this thing, but they are not made in India. So only those are imported. Balance are all made in India.
Anything from China?
We are very well. No, not China also, because our plastics also don't come like that. And even if we are buying all from global companies. So maybe if it's coming from a factory in China, it could be something different, but not otherwise. So these are not from any Chinese manufacturer or from any of the Chinese companies. And I think the government is pretty clear on that they want the whole thing to be made in India, and I think we are well within the norms. In fact, we are ahead of the norms because that is how because we have been very well backward integrated initially also in the traditional meters and now also as we look at the smart meter opportunity.
Excellent. How do you think about leverage on your books, Gautam, and any plans to bring that down?
You're talking about debt?
Debt, yes.
Yeah. So, we are, the way we look at it, the revenue growth seems to be there last 3 years. It's there. In fact, if you see in the last 2 years, if you see end of FY23, we grew by almost 20%, but we didn't add any debt on that. Right now, of course, there is a lot of, the scale up is happening because looking at the next 2-3 years, so certain debt has gone up. But overall, if you see the next 2-3 years, we would see the revenue going up. We are also seeing probably from FY26, after this year, the working capital cycle would also start improving much better, especially in the metering part, because the bulk of the supplies will be to the AMI SPs and probably all round the installation work would be going on. So that is when the peak would happen. So on that, we definitely look to reduce the debt. But right now, when we look at it, our aim is that, to keep the debts almost at a similar level, but to have a scale up. So when you look at the interest cost on our books, the finance cost, so a lot of it, almost 20% is actually the bank charges. So it's not all the interest what you see in that, because there are a lot of bank guarantees which are going right now, even in the bidding process or even as the execution is happening. So the other costs, the bank charges, the BG charges, the LC charges, those costs are also playing they come combined on the finance cost. So those are also there, but in the last couple of months, we have been able to bring down our effective rate of interest. I think going forward, we are looking at overall the scenario because we had a rating upgrade. So our teams have been, pretty much on that to make sure we get a lot of benefits. So we have been able to get that. But going forward, we definitely see even the interest rates coming down and probably our debts coming down or not going up on proportion to the increase in revenues. Yeah.
Understood. Very clear. Thank you. All the best.
Thank you.
Thank you. We'll take the next question from the line of Samarth Khandelwal from ICICI Securities. Please go ahead.
Hello. Thank you for taking my question again. I would like to know, how does the level of competitive intensity in the market it influences our firms, particularly in the terms of pricing?
No, so you're talking across the products or any specific product?
For the smart meter specifically.
So there is, now the procurements are happening by the AMI SPs, which are, typically large, public companies. So they obviously the competitive index is there. There are a couple of the established players and a couple of new players who have come in. So I think it's an open market, but I think there are certain factors which, what I believe will eventually determine how an AMI SP would be using or procuring the meters, and that is where we see our strength coming in. Our experience for so many years is, has been there in the metering part. We have been, there are bank guarantees involved in this. The AMI SPs are supplying based on SLA breaches, which are typically 98-99%. So again, that means the uptime has to be very strong. The quality of meters has to be very good. And with a 10-year warranty, the meters manufactured now have to actually work for 10 years. So that makes the ask from a quality and technology perspective pretty high. And that is where we score. Also, the AMI SPs are they are getting their payments in 10 years. So overall, looking at this background where they require a product which works for 10 years, the SLA breaches are there, which again penalizes them on any downtime, and the overall the payments coming in 10 years, which is again a certain kind of a risk they are probably taking on this. Why I'm saying this is because then the selection of meters becomes very important for them, because the heart of the entire system is today a meter, and getting a good meter manufacturer for them who can actually supply a meter working for 10 years, standing and supporting them across till the end of the 10th year by the time they get their payments. I think these factors puts us in a very strong position. So even if, let's say, the pricing or somebody, we talked of the competitive index, if somebody comes and is giving it 500 or 700 rupees lower, I think to an AMI SP that cost is not much, looking at the overall cost of running the meters for 10 years there. So I think overall, yes, it will be competitive, because wherever opportunities are there, people come in, a lot of new industrial houses could be coming in. But overall, I think we are playing on our strengths. We are well focused on that, because we have a huge R&D, very strong. We have been able to deliver a lot of products in the last almost 2 decades of meters from our R&D team. So that has been there right from understanding the complete landscape of the metering part. So we are there. Plus adoption of new technologies, whether it is on cellular or RF or whatever is there. I think we are well experienced for that, and I think that is why we believe we are quite preferred from the AMI SP people. So that is how it is.
Understood. That makes it very clear. Sir, could you share some light on the specific extension that we are taking in a smart meter manufacturing?
No, sorry, I didn't understand. Can you repeat the question?
Yes, sir. In the investor presentation on slide number 17, you have mentioned we are undertaking capacity extension for smart meter manufacturing. So currently, as I understand, we have 11 million smart meter manufacturing capacity, right?
Yes.
So after the capacity extension, how much would we be able to produce?
Yeah. So currently we have, last year we did capacity expansion on the industrial plastic molding part, where almost we would be having over 20 molding machines, certain tool rooms being added. Then also certain electronic manufacturing has been added. So right now, I won't probably give a comment on the number of the overall, but over the next 1 to 2 years, we do see that this 1.1 let's say crore meters what we can make would probably, or let's say over we would be well over 10 lakh or 1 million meters per month going forward, going up to even almost 1.5 crores per annum. So certain expansions are happening. I think this year also we would be expanding our capacity, but a lot of expansion is also happening on the automation part. So it's not so it is that with the same manpower, with the same resources, just adding the automations is going to give us a better output, and that is going to also enhance our production. So I think eventually we would be going up from here. The next 2-3 years we should be at least 30%, 40% more higher than what we are right now.
Thank you. And all the best for the next 3 years.
Yeah. Thank you.
Thank you. We'll take the next question from the line of Mudit Kabra from Elara Securities. Please go ahead.
Yeah. Hi, sir. So firstly, on the smart meter installations, like in the country, what is the total number of smart meter installations which has been there, like from the 25 crore numbers till now?
No, I think these are data. Like my information is as good as probably yours, where we need to see the public data of the government. But I think it is about 1 point some crore meters which are installed. So right now, but since a lot of orders, almost 10 times the orders have gone already to the AMI SPs, so we should at some point in time during the year see a surge in the installations to happen, and that is bound to happen, because right now any order going to the AMI SP requires at least 6 to 9 months to start rolling out. But once the rollout happens, then the installation becomes much more faster.
Correct, sir. Got it. Also, like on the sequential basis, the order backlog has dipped this quarter, Q4. Are we seeing some deference or delay until maybe H1 of FY25? Or as per the sense of as of how the quarter has gone by Q1, are we seeing the orders build up again?
So one thing, like I said earlier, there is a lot of good pipeline orders which are there, and many of these are there which, let's say, if they are with the AMI SPs, which we believe would probably eventually come to us, because we've already got part of the orders, the others are also committed. So right now we are not worried about, let's say, quarter on quarter, if the overall order book goes down a little bit on faster execution. Our focus is very clear that we need to do execution as per the delivery schedules as fast as possible. Yeah, that is what we want. So even if the overall number comes down a little bit in one quarter, it doesn't make a difference to us, because eventually the repeats are going to come in, and the order pipeline would swell from here. So it may happen that this 2,000 could easily become 3,000. So that's that would just be a number. Right now the focus is more on execution quarter on quarter basis, so that steadily we are able to deplete the order book. And obviously the new order book would happen. There are teams working on that, and still a lot of states are just about getting into the smart metering part. So I would say the order is not an issue right now. The thing is the faster execution and getting the right product to the AMI SPs, definitely that is the priority right now.
Understood, sir. Sir, I have a couple of questions on the consumer segment category. Any sense of lighting volume growth, if we can have the numbers for Q4 and FY24?
No, volume, we've been saying continuously, I think it's an industry-wide phenomena that the lighting value erosion has been happening. So because of that, there has been some bit of destocking. The traders, because when they see the value continuously coming down, they also become very cautious in picking up stocks. So, but again, we have, since if you see in the Q4 and even now, there is some semblance that at least there is some stability in the pricing. So it's not going down further. I would say certain volumes are coming back. But I definitely in this year we would start seeing the volume growth and value growth coming in, but that should happen probably in the second half of the year. But already things are getting better in the lighting part, and we have also seen consolidation of the industry into much more organized players. So because of the disruption what happened with prices coming down almost for 12 to 18 months, so that has become quite difficult for the unorganized markets or even cheap imports coming from China. So those things we have seen really decline, and the branded manufacturers are definitely there, and overall. But the good thing about lighting is that the overall demand is there. So if you look at any international report or even in domestic side, the demand for lighting is going to grow in the next 3 to 5 years in a very good manner. So I think that is where we need to align ourselves. But with technology change, sometimes certain disruptions do come in. So I think that we have passed that disruption stage. So now it's again a rebuilding to get back on the volumes.
Fair, sir. Understood. Sir, congrats on the retail expansion which you've done in this year. We have nearly doubled our retail channel. However, our growth in consumer has not been as good as what our expansion has been. Obviously, some of which could be attributed to sectoral tailwinds also. But can we expect these numbers to show healthy growth in FY25 basis on the channel expansion which we've done last year, and also we're targeting aggressive growth in retail expansion this year?
Yeah. So, Mudit, I'd like to just add something to what you said. If you see the highest growth segment in the last year has been switchgear. Of course, meter, we talk a lot on meters, so sometimes that comes under the shadow, the switchgear part. But switchgear also grew by almost 27.43%. So even the year before that, switchgear has seen a growth. These comprises of, the switches, the MCBs, the industrial switchgear. So all of that also has been growing, which is mainly because of the growth in housing, growth in the domestic market, the channel sales, and also the infrastructure segment here. That is how it is. So that part switchgear has been good. Wire also, broadly, if you look at the pure trade figures, for both the years has been very encouraging. So that's again dependent on the channel and trade. Lighting unfortunately went down because of the issues the industry had and the technological change. But I think with the lighting coming back, the entire trade segment, I believe, would really grow in a big way. Our focus when you look at the consumer and industrial part, and especially the consumer products, whether it is a building segment or it's a condo or a house owner, whatever is there, or a domestic customer, we can offer good a basket of 5 products, like a one-stop shop, wherein switches, MCB, DBs, and the complete accessories what are there, the lighting, the wire and fans, we are able to offer to them. So I think that's a very good, product basket. We have a very extensive range in them, and we can, leverage our and play up with, use the, do the cross-selling at the dealer and the retail level, and push the customers with the amount of, with the entire basket. And I think that is where we should be, that is how we look at this business. So the consumer business is also set to grow. The next 2-3 years will be good. It's dependent a lot, as per me, on 2 basic things. Channel expansion, because that is the key to the whole thing. And second is the brand building. And I think from a relationship perspective with our channel, I think HPL has been, we've been, I would say that's been a very strong point, maintaining the relationship with our channel for so many years. We've always been a long-term player, whenever we approach the market. So that has helped us. So overall, I would say the consumer segment also is looking for a good growth this year. Yeah.
Fair understanding, sir. Thank you. And lastly, sir, on the margin guidance, any guidance for FY25 and the capex number for FY25? And you've also mentioned that we'll touch 1.5 crores capacity for meters. By when are we expecting that to happen, sir?
No, so look, the 1.5 crore capacity would happen, it would happen gradually, because we will look at wherever the gaps are happening. So let's say we realize that we needed much more on the electronic side. So when we build up that, obviously we build up looking at the future. So, you can't keep building up each department every time. So gradually, as more and more capacity expansions would happen, so maybe in the next 2 to 3 years, we could reach that figure, or earlier, if depending on the demand. So these are, I don't think it takes too much time to build it from here on, because basically the basic infrastructure is in place. We are talking about the add-ons, which can easily be done as required. So as the numbers increase in terms of the ask from the AMI SP and the speed of installation increases, that is where we would find that we can up the capex and then accordingly supply from there.
Okay. Any number guidance?
In terms of, so from a revenue perspective, I think from 1460 we should be anywhere looking at 1800, maybe plus on that. Of course, internally we are, having a higher target, I would say. But overall, I think the growth should be good this year. And even on the margin part, of course, is a lot of it also depends on the product mix. But right now, since meters, switchgears are anyway performing well, so I think overall the margin also should be good, and overall we should be improving on that.
Perfect. Thanks for answering all those questions, sir. Wish you all the best for FY25.
Yeah. Thank you. Thank you.
Thank you, sir. Ladies and gentlemen, as there are no further questions, I would now like to hand the conference over to Mr. Mudit Kabra for closing comments. Over to you.
Thank you. We thank Mr. Gautam, sir, for giving us this opportunity to host this call. We also thank all the investors and the analysts for joining the call. Any closing remarks, Gautam, sir?
No, I would just like to thank everyone for coming here and being part of our growth story, and I'm sure we remain committed on the future of the business, on the results, what we talk about, and exploiting the opportunities here. So in case anybody has any queries or questions, so they can be in touch with Dickinson's IR or anytime with us here. So all of you, so have a pleasant afternoon. Thanks a lot.
Thank you, members of the management. On behalf of Elara Securities Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.